Okay, folks, welcome to Swing Trading Today. This is Bob Desmond at the Contrarian Trader, and it is March the 15th, halfway through the month, 5:12 in the a.m. Eastern Standard Time. Let's get to the pre-market activity, kicking things off with the U.S. dollar. You know, actually, before I start talking about the dollar, let's talk about what we're going to do here first. I'm going to solicit some feedback. I changed the theme, the background here, from a dark black color to a light white color. Can you just please let me know in the comments section, do you like the white better? Do you like the black better? And I'll go with the consensus view. We're going to kick things first off with the pre-market activity. Then we're going to segue over and into a follow-up on our focus stocks moving into this new trading week. I will be putting together best stock charts for next week. If you want that delivered to your inbox, visit the website. Click the link in the description box to get to the website, or perhaps one will appear above. Enter your email address anywhere on the website, and that'll come out to you. All the symbols that I review here are listed in sequence below. If you're watching this on YouTube, above if you're watching this on the blog. We do not do clickbait. Any of the symbols that are listed, I review. Now, in the case of GLD, I'll use the futures for GLD because at 5:14 now in the AM, GLD is not showing much liquidity, right? So you'd want to watch the futures versus the GLD. So forgive me for taking some license and replacing the ETF for a future. But when all is said and done, they're all the same. We're looking for price action. All right, let's get to it. We're looking at the DXY. This is the US dollar index. Sometimes I'll post this as a UUP on social media. What difference does it make? How is the dollar doing this morning? Well, overnight, you could see in gray you have the overnight price action and the AM price action. And we broke down yet again after a rally, a recapture of support, and now we are breaking down. Yes, there's a challenge right now in an effort to try to recapture that support. Maybe it'll happen. You know, if you take a look at the RSI, we had broken out. We are putting in higher lows. So I don't want to rule out the potential for the dollar to recapture support and perhaps take out the highs of yesterday. Why is the dollar rallying back now? It's because the trade deal with China has been, for the most part, backburnered. When you see a trade deal pass, you're going to see the dollar sell off. Why? The need for a safe haven play is over and done with. B, the U.S. consumer will just resume their massive purchases of Chinese cheap goods, go more and more into debt, pressuring the U.S. dollar because our trade deficit will widen. So take note, when you have a positive news flow on the trade talks, the dollar weakens. And when the trade talks are not going well, well, then you see strength in the U.S. dollar. That's just the way it is. Let's move on to commodities because they trade inversely, by and large, of the U.S. dollar. Gold, which had a disastrous day yesterday, is bouncing back by about a half percentage point this morning. We are back above the 1300 level. That's a critical support level. I mentioned the other day on Swing Trading Today that you need to watch the 1310 level highlighted here in blue. That is critical resistance. That's the real number to watch as resistance and support for gold. So keep an eye on it. We fell shy of recapture on the 13th. Let's see what happens. Probably not today, next week. Crude oil prices, they pulled back some yesterday. You're seeing some strength this morning. I think that we're probably going to break out higher here. And we have an eye on putting on a long trade on oil. I think that the daily chart is looking good. The weekly chart is looking good. You have a strong 4-hour base built here to break out of. And we have broken out. So we're putting in higher lows and higher highs. So members, more to come on a potential trade in crude oil. Let's talk about silver. Silver is rebounding today after a horrible Thursday. We're stalling out a bit here at this 20-period moving average on a 4-hour chart. Forgive me, these are all 4-hour charts, unless I say otherwise. It appears as though we have broken out an RSI. We're pulling back right now and doing a retest of support. So that's fairly bullish. I will caution that we have the potential here. And one of our members pointed this out to us the other day prior to the sell-off on NUGT daily chart, was that you had the potential for a head and shoulders setup. And good call by him. We did not break the neckline, but a really great observation on his part. And the shares did pull back yesterday after he made his observation on a strong up day the prior day. So looking at this chart here, silver has the potential for a head and shoulders setup. Left shoulder, rounding top here, right shoulder. Here would be your neckline. And we'll just highlight this. Red for disaster area if it breaks. So silver, a good morning today. Let's watch and see how we close out the week. And what we'll be doing today, folks, with members is taking a look at the weekly charts of the major averages and making our determination as to whether or not we have a bullish week or a bearish week today. That sets the stage for us, positioning ourselves for next week. So members, stay tuned. I'll put a blurb in the forum of what I'm thinking about the closing price action of the major averages and perhaps a few of our watch stocks. Let's take a look at Nat Gas. Nat Gas broke out on Thursday, pulled back or retesting. I think that Nat Gas is getting ready for a breakout. Now, here's the good thing about Nat Gas. It can rally with a stronger U.S. dollar. It is not as inversely correlated as is gold. So if you want a lot of volatility, look at the UGAZ, which is broken out as well, above resistance, last seen back here on the 7th of March. So we may get a pop here on the UGAZ. This is very volatile. If you don't want the volatility, simply look at the UNG. Very similar price action, less volatility. That may be for you. You want to be able to sleep at night. Let's move on. Let's talk about Bitcoin, and then we'll talk about the stock market futures. I bought Bitcoin during my hiatus from doing swing trading today, and we're about flat with it. It's been a nice consolidation here, and I think that we're going to break out fairly soon. You can see that we are sitting in this wedge formation. We've been in this wedge formation since mid-February. It's a long-term consolidation on a 4-hour chart now. We're getting higher lows and now higher highs on RSI. I think we're breaking out fairly soon. Could be today, could be next week, but fairly soon we should see a breakout on Bitcoin. Members, will talk about the daily and weekly chart of Bitcoin on the week ahead commentary, so stay tuned. Let's talk about the stock market futures. The S&P 500, first off, we have a strong morning this morning. No new daily high yet, but we are up about 8.5 points. And what we're looking for here is a continuation move higher. And if we do break out, we can extrapolate that we'll probably see a rally up to 2840 to 2848 in that range. If we break down below key support here at the 2807 level, we'll probably come down here to 2789. So a fairly significant move in either direction if we break out or break down on the S&P 500. Keep an eye on it. The weekly chart is looking good. I already took a look at them earlier this morning. Members, again, we'll do a follow-up later today on the weekly view of how we're closing out the week. We do have a short trade, a brand new short trade on. Do we take it off? It all depends upon the price action today. No need for our stop to get triggered if we believe that the probability of a continuation move higher is stronger next week. Let's be preemptive. Let's keep our losses small and let our winners run. Let's talk about the NASDAQ. The NASDAQ up strong this morning, up 32 points. And we are definitely flirting with a breakout here. Nice bull flag setup. This is a continuation breakout pattern. If we rally through resistance, we could rally all the way up to 74.01 on the NASDAQ. If we break down, we're coming down here to this support level, which acted as the breakout point a few days ago at, let's call it, 72.04 on the NASDAQ. We'll leave off with a view of how bonds are doing this morning. If bonds are up, that means yields are under pressure. Bonds are looking solid. We are up slightly this morning. And what we're seeing here is a tight triangle formation. The short-term trend is up. Therefore, the path of least resistance remains up. So the probability of a move higher here on the 10-year Treasury note is fairly good. So what we'll be watching is the weekly chart of the 10-year yield. Earlier this week, it had broken down below key support. The question is, do we close at that level or worse? Or do we manage to salvage the week and close above support? Again, members, we'll be talking about that later today. That way we'll position ourselves appropriately for the coming week. Let's segue over and into now our watch stocks or focus stocks from last week and a couple of member stock chart requests. All right, let's begin with ATOS, ATOS. Looks like a biotech company, and this is a request, and man, what a tear. We are up 371% so far this week. Amazing. Is there more upside potential here? Sure. I mean, you're rallying up over 300%, nearly 400%. Sure. It depends upon the news. What was the catalyst? What was the cause of the rally? Are there a huge number of shorts in this name? Are they still dying to get out? It all goes back to sentiment. Now, if there is more fuel in the tank, I think that you could rally up to 9.99 on the shares. That's where the next critical resistance level is, right here. We closed yesterday out at a resistance level. Now, I will warn that we are trading above the third standard deviation Bollinger Band on a weekly basis. Does that mean you sell your shares automatically? No, not necessarily, but you had better have an exit strategy because you're going to get a pullback. And if you're long from down here, folks, don't be greedy. Make some of those profits real, I beg of you. Daily chart. Now, on a daily basis, you're ripping through the third standard deviation Bollinger Band. For those that are not familiar with what the third standard deviation Bollinger Band, it is a higher level of unsustainability that we use in order to determine whether or not a rally is rational or irrational. In this case here, the shares of ATOS are ripping through that resistance level. This is not your out-of-the-box Bollinger Band. It's a modified Bollinger Band. In essence, we're not supposed to be here. Does that mean that we can't trade sideways, thus alleviating the oversold condition, quote-unquote, oversold condition relative to the third and, frankly, second standard deviation Bollinger Band? No, we can, no doubt about it. It all depends upon the why behind these shares are rallying. Now, also, daily basis. This is a purely technical observation, folks. So forgive me if I don't know the fundamentals behind this company. And I will look up on it because it's really interesting to me. The RSI here is 96. Right? Again, you're not supposed to be here. This is unsustainable. You are going to get a pullback, and in all probability, it is going to be a ruthless one. Use a trailing stop. Book some profits. If you get a new higher high, make them real. Remember, we closed at resistance. You also have resistance up at 9.99. Don't use your human intellect to set a trailing stop or a limit stop order or a advanced order to sell at 9.97, just shy of that resistance level. Set your computer up. Let the computer do the work for you because you're trading against computers. They are faster than you. NIO, the next chart up. All right, so this is a basket case. This stock is going lower. Let's let's go to a weekly chart first to get that higher level view. This is all you need to know. If we break 5.84, we're going up to 5.35. If we break 5.35, where's the bottom? I don't know, because we've never been there before. So this is a weak stock and it's getting weaker. Now, let's talk about what we like about the shares. And it's kind of difficult to do in that you don't have a lot of data here, but we did put in a big W formation. In fact, let's update this and I'll illustrate it better. Okay, so what we have here is a W formation. Here's your left side of your W, your pivot point at the 8.21 level, meaning the center of your W. Here's your right side of your W. Now, what's bullish about these shares is that we put in a higher low, prior low back in, let's use the October number, forget about this number here. The October number, 5.61, higher low in December. Then here, the week of January 28th, we broke out above this resistance level. So now we had higher lows and we began putting in higher highs. We rallied, pulled back, higher low, broke out. Good stuff. Now, if we close out the week below this lower band of support, that's a problem. However, if we rally back today and close at or above, let's call it the 6.25 level, that's a bullish event. That means that we've pulled back and retested support, it held, and we may consolidate and then resume the move higher. Now, I don't know anything about this company. My opinion is based purely on technical analysis. But if we close below the support level, we're coming here to 5.84. We're going to retest the support level. And if it breaks, we're going lower. So in cases like this, what you want to do is you want to wait and see how we close out the week. Wait until 3:55 Eastern Standard Time. Watch and see. Come back to this chart. Watch and see. I'll post this in the forum. How we close out the week. Are we trading back above 6.25? Or are we going to break below the support, setting the stage for a probability of a new continuation move lower next week? So right now, NIO is a watch. Google was a watch stock last week. I was bullish on it. We did get a continuation move higher this week, 3.7% on the week. We were higher. We did pull back a little bit off the highs, daily chart. And it looks as though after flashing a hollow-filled candlestick on Wednesday, Thursday, a bearish key reversal, we'll probably get a continuation pullback here. Let's watch and see how we close out the week before entering a trade. Kim, this is Kimco Realty. A very nice week. We have broken out on a weekly basis. The question is, do we close there? We'll be watching it. We have a beautiful inverted head and shoulders setup. Left shoulder, head, right shoulder. Here's our 45-degree neckline. We broke out several weeks ago. 2019 has been a very nice week. Daily chart. Daily basis, we have broken out. So we were bullish last week. Our bullish optimism paid off this week. We broke out of this bull flag setup. A bullish key reversal yesterday. It looks as though the path of least resistance is higher for Kimco. We may be putting on a trade here. Members, watch for an alert. SINA, I made the argument for being both bullish and bearish on SINA, and nothing has changed on a weekly basis. The reason why I was bullish was that we had broken out here, rallied up to resistance, pulled back. The question was, going into this week, were we retesting support? Would it hold, and would it set the stage for a higher low from the prior low at 51.76? And then would we see a resumption of a move higher? Or more nefarious would be, do we break support and then begin to take out prior lows? That sets the stage for a continuation breakdown and the probability of a break below the December lows, setting the stage for SINA becoming a short. Now, nothing has changed here. If anything, I remain more bearish than bullish on the shares because these shares have not rallied with the S&P 500. They have been laggards. So nothing to do here but watch. And if anything, I am more bearish than bullish than what I was last weekend. BIDU. It's had a good week thus far. I'm loving the indicators in that you're seeing higher lows on RSI, higher lows on Stokes. And it looks like we may close out the week with a bullish setup on those indicators. Is that enough? No. Price action and volume action trump all. And we have managed thus far this week, one trading day left to go, to recapture prior support, which had been resistance. Let's see whether or not we close above the support level. Or do we fail to hold it and we sell off today? Volume, I don't see how it recovers to make up for the massive deficit in volume between the moving average in red and where we stand today. So it looks like volume coming in very light on the week daily chart. The daily chart looks like a consolidation. We have higher lows, no higher highs yet. A lot of resistance above. We need to see a breakout before we ever decided to buy these shares. RSI and Stokes are looking good. These are forward indicators. They're looking okay. Down volume yesterday was very light, but up volume was very light as well. Nothing happening here. So no reason to go running in and buying these shares on hope. If anything, we remain in the downtrend and we should be fearful were we to decide to put on a long trade. AutoNation was another stock I talked about last week, which could have been bullish or bearish. The reason why we were somewhat bullish were we were looking for a retest of support, which is where we hit this week. The problem is that the low of the week is 32.89. The prior low back in December was 32.87. We're right there. If we break down below the December lows, AutoNation becomes a short because that would mark a continuation breakdown in a big bear market here on AutoNation. So I'm very skeptical about these shares given the price action of the week. Earlier in the week, they did rally, but thus far this week, as we begin to move into Friday trade, we have a bearish key reversal on the week. AutoNation daily chart. Again, it looks as though we are going to probe and retest prior lows. I am very bearish on these shares. Yesterday's volume and the prior day's volume, very high. We're seeing more institutional distribution. Be very, very careful here, folks. That is it for today. Don't forget, we're doing our watch stocks tomorrow, best stock charts. Go to the website, enter your email address in any of the opt-in forms there. You will not be spammed, and we'll send those watch stocks out to you tomorrow. Everybody have a profitable trading day, and I will talk to you soon. Be well.